Welcome to Fynders Keepers, the vodcast powered by Asset Find. Here, we talk with the people shaping the future of global financial asset recovery, from industry veterans to technology innovators. Each episode uncovers new insights, real-world challenges, and the emerging tools helping companies locate and recover billions in unclaimed financial assets worldwide. If it touches finance, data, or discovery, we're talking about it here. This is Fynders Keepers, where every conversation uncovers something worth finding. Well, my guest today has worn just about every hat in the unclaimed property world. Will King leads the National Unclaimed Property Practice at KPMG, where he advises large organizations on audit defense, voluntary disclosure, and compliance risk. He speaks and writes on the topic regularly, and he just wrapped his term as president of UPPO, the industry's leading unclaimed property professional organization. From that chair, he refreshed UPPO's strategic plan, deepened collaboration with NAPA and state administrators, launched the new Operational Compliance Committee, and filed an amicus brief with the Michigan Supreme Court on Disney v. Eubanks. There are a lot of lessons in that list, which is why we're calling today's episode Lessons from King's Chair. Will, welcome to Fynders Keepers.
Thanks for having me. You're going to make me blush with that introduction, Sean, but I'm happy to be here.
That's great. That was the intent, and some amazing accomplishments. So, you've been in this space across several prominent firms, private practice, and now KPMG. So, looking back, what are some of the things about unclaimed property you believed early in your career that you now know to maybe be wrong?
Yeah. So I came to unclaimed property right out of law school at a time when there was an economic recession and not a lot of jobs for lawyers. And I remember being very young and thinking to myself, I was really nervous about getting in a niche so early in my career. And what was this thing called unclaimed property? Because, by the way, they didn't teach anything about it in class. And I got connected through a friend to a mentor who was an attorney at a big law firm. And that mentor said, actually, you really need to look into this niche. There's not that many people who know about it. It's kind of the wild, wild west of what's going on. And there could be some good opportunity in here. And you if you're good at it, you might always have a job. And so that is how I got into unclaimed property. And I remember being a little fearful when I started to learn what unclaimed property was. Yes, there was a lot of activity going on. There were a lot of audits. There wasn't a lot of regulation. Seemed to be a lot of opportunity. I remember getting into unclaimed property and thinking to myself when I first learned about it, oh, this is uncashed checks. This is uncashed checks. And then thinking like, this is a field that's going to go away at some point in the future because everyone's going to get paid electronically. I have since learned that no matter what, there will be unclaimed property in some way, shape, or form, even if payments become electronic and things like that. But yes, that early in my career, scared about it going into a niche so soon and thinking that this was sort of a diminishing sort of area, much the wiser now.
So it sounds like you had some great advice, whoever mentored you on advising you to get into the space. It sounds like it was a fit for you personally and with your background and knowledge and law degree. But it is so true that it is a growing space and probably still a space I think that very few people know. I wonder if it's even taught at school, even yet today, I'm not sure that, that that's the case. And, with respect to sort of checks, someday will actually no longer sort of be there. Of course, with the rise of digital currency, it's actually being compounded in terms of its importance and being on the radar. So, during your time as president of UPPO, what's the one thing that you were really determined to get done on your watch?
Well, first off, let me say, all credit to my mentor who got me into this space, who was Jen Borden, who's still practicing attorney and somebody I work with a lot and admire. So I will give a plug there.
She's going to be an upcoming guest on Fynders Keepers, by the way.
Good. I'm sure it'll be a wonderful conversation. It always is. With UPPO, when I first got onto the board as vice president, and then the vice president naturally becomes the president. When I when I got on the board, one of the things I was very cognizant of was that UPO was really instrumental in my career in unclaimed property. So I went to my first UPO conference. I had never spoken before to at a conference, to a big group, to anybody, anything like that, particularly on technical topics like a subject matter that I was relatively new to at the time. And I was volunteered to speak in a session, and it was a bit overwhelming. And a couple of things like I remember, one is that I think my nerves probably showed through, and some people that I really admire in the space who've been practicing for a very long time came up to me afterwards and said, "Hey, you handled that subject matter great. Like it's awesome that you're running with it." And so one, I thought just the community of professionals at UPO was incredibly supportive to each other, and I really love that. And so when I got on the board, that's something that I was very cognizant of. Like one, this is an important networking and educational and advocacy related organization, but we're also growing careers for people that are relatively new to the space. So figuring out ways that we could grow our membership, invite more people in to the organization was important, and then give them opportunities to grow, to speak at the conference, to volunteer, to get involved in different ways was a high priority. Also education. So, we very early on crafted the operational compliance. First, it was a task force, then it became a standing committee. Its goal was to provide, well, we have a really amazing and awesome government relations and advocacy committee, GRAC, that is advocating law changes and writing amicus briefs and getting involved in the developments that are happening around the states from an unclaimed property perspective. We also have holders in the organization who just have nuts and bolts questions about compliance. Like, how do I do this? How do I get this on the reports? What do the states want to see in these different NAPA fields? We've got NAPA 3 that'll come at some point, and there's going to be lots of questions there too. So another high priority was making sure that we were providing educational avenues to our holder members, so that they could have that access. And then maybe my third thing that was top of mind as I became president was our claimant rep group. They are extremely active. And I think they have some incredible ideas, the claimant rep group, about evidence standards and working with the states to actually, where we share common ground with the states is this goal of reuniting people with their property. And so really, giving the claimant rep group, access and encouragement and resources to grow, to build the relationships with the states that they want to. That was a priority for me and the board as well.
Well, those were some very, high aspirations, and I have no doubt that you met them all,
Shoot for
and
the stars,
cheer for the
Sean.
stars, and I think you actually reached them as well. And I would say very admirable goals that were quite altruistic in terms of I heard themes of real great leadership, empowering the members and growth, and just really on top of that, again arming them with the resources they need for them as individuals, as professionals, but the community as a whole to rise to another level. So that's great work. So I want to talk a little bit more about the holders. So from your vantage point at KPMG, dealing with some of the largest US firms, what is the gap between how seriously companies think that they're actually taking unclaimed property and how seriously you see that they actually are?
Mm, that's a really great question. We work with some very large clients and companies, and to your point, I think unclaimed property is by and large, at least for our clients, because they've engaged us to assist them with unclaimed property matters, they take it seriously. They understand that it's a compliance obligation. They understand that it's quasi-consumer protection statute in many states. They understand the risks of non-compliance. They want to be compliant. I think it's taken pretty seriously amongst companies that I work with, because they otherwise wouldn't have hired a firm like KPMG to help them. Where we see, I think, disconnects are in keeping track with the evolution of unclaimed property, statutory requirements, and then businesses themselves. So oftentimes what we see is that while unclaimed property compliance is taken seriously, a business might grow faster than their compliance program does, or their jurisdictional footprint might grow faster than their compliance program or process does. And so keeping up with everything becomes a big gap. Statutes change, companies offer new products, they're looking for new ways to interact with their customers. They collect new data that they didn't previously have that impacts the sourcing of things or how things come about. They acquire companies and unclaimed property. While I get pulled into a lot of M&A deals to support our M&A practice, sometimes it's at the 11th hour. Unclaimed property is oftentimes not the first thing that comes up in those
Right.
transactions.
Right.
So I think that the keeping up part might be the biggest gap in just between intent and what really happens.
And I guess, it's this classic sort of model of more so a reactive approach versus a proactive approach, which again, I think bringing on board partners like KPMG to help them with the process, not necessarily just at the 11th hour, but seeing KPMG as a partner throughout the journey.
Definitely. Yeah. I mean, what we're finding more and more is that we can deliver more value to clients. Yes, we are unclaimed property subject matter experts, and we know a lot about unclaimed property requirements and challenges and issues. But where I think we're also finding that we're bringing value to clients is by bringing really like the full breadth of our firm to their issues. So, I am not a data scientist. I am not a programmer. I don't write code or extract data out of source systems, things like that. But I've got people here at the firm who can help with those challenges. And so, we are working on unclaimed property matters, but we're oftentimes bringing in people from our advisory firm side who know all about systems and implementations and data extractions. We're bringing in people from our EVS side, our economic evaluation side to price things. We're looking at statisticians. We're looking at sales and use tax implications for sourcing things to different states. I mean, there's a lot of cross analysis that happens that, yeah, we
It's
bring.
very helpful to your clients. So, I want to talk about a three-letter acronym that, can be good or bad depending. So VDA, so voluntary disclosure agreements, they're supposed to be this sort of come clean option. So, is there ever a time or when does a VDA make sense? And is there ever a time when it does not?
Oh, absolutely. There's a time when it does not. And depends on, and like everything, like they taught me in law school and like they say everything in state tax, it depends on the state, whether it makes sense or not.
Right.
There is definitely times when it doesn't make sense. And I think it's really important, as part of being like a business advisor to a client, it's really important to be pragmatic sometimes in giving advice. And so one of the things we do is we walk through, okay, what is the amount that you want to report to this state? What are your options for resolving that issue in that state with the best outcomes that you can get, which is usually a waiver of penalties and interest, maybe a mitigation of audit risk. What are we trying to get? And then what's the best way to achieve it, knowing what we know about that state and their particular program and the level of effort that's involved in completing that route. Because as we like to say, nobody wants to spend dollars to save pennies.
Right.
And so what we found is that there are a number of states that offer VDA programs by the book, but that the level of effort to complete it can probably outweigh the benefits that a company might receive. And particularly when you consider the fact that many states don't waive their right to audit, you're just securing a penalty and interest waiver, you can really calculate the cost benefit of a VDA program in a state pretty easily. We also find that number of states will work with holders. So states want holders to engage with them. They want people to reach out and explain the scenario oftentimes and say what's the best way to do this. And what we found is that a lot of states will work with us on securing waivers of penalties and interest in informal ways. That when the VDA process does not make sense, you can still obtain those benefits in that way. And then other times it does make sense.
Right.
When the benefits are there, when the company needs to secure a formal release or sees value in getting a formal release, obviously going that more formal route is beneficial. But it's definitely an analysis, and not all one way or not all the other.
Makes a lot of sense. So moving along the scale, how about the word audit, which, can also induce heart palpitations and, night sweats. And, I see it even visibly in you right now. So what is it that initiates a state unclaimed property audit? And what do the first 90 days look like for a company that gets one,
Great question.
other than a lot of stress, perhaps?
Yeah, exactly. Just lots of sleepless nights and things like that. But maybe to take the first part, what initiates an audit these days? The states have never told us what their criteria for selecting companies for audit is. And if anybody knows that, then they'll be the best in our business because they'll know everybody who's going to get audited and when and why.
Like a crystal
So
ball,
yeah, exactly.
psychic
They will
stuff.
have the crystal ball and
Okay.
and everything. Um, so states have never told us what leads to an audit. I think that we've recognized a couple of different things about it. One, there seems to be industry focuses that happen. So we see auditors or audit cycles kind of move through industries based on maturity or issues that are perceived to exist in those spaces. We've seen audits of the securities industry, of oil and gas companies, of banking and financial services firms, and healthcare companies and insurers over the years. So we see them work in these kind of industry cycles. And I think we're seeing, based upon my observations at least, we see current industry trends in internet and technology companies and payment processors and fintech and firms that are just reaching maturity, that interact with customers, that are just reaching maturity enough where they might have unclaimed property and they might not have thought about a compliance process or program before that. So definitely industry trends, perceived compliance gaps in those industry trends. The other thing we're seeing more and more of is data and analytics at the state side to identify potential non-compliance. So companies that are making tax filings in a state, income tax filings or sales and use tax filings, but not making unclaimed property filings, the states are connecting that data. And they're saying, okay, well, wait a minute. You've got customers in my state, you're making sales in my state, or you have a physical presence or employees in my state, but you don't have any uncashed payroll checks or you don't have any uncashed customer credits or
There's a
balance.
mismatch. There's a mismatch there, and it triggers. Yeah.
Exactly.
Yeah.
Yeah. And so we're seeing more interconnectivity at state levels, particularly where unclaimed property resides also in the departments of taxation or revenue. You see that happening more and more to identify noncompliance. So, those are probably two trends. The second part of your question, what do the first 90 days look like in an audit? Honestly, the first 90 days might be pretty quiet. The first 90 days,
The calm before the storm, perhaps.
yeah, the first 90 days, you might get a slow trickle in of state audit notices because, these are oftentimes multi-state exams and it takes time for the states to authorize those audits and send those notices out. So, I think the first 90 days, companies are usually getting in a trickle of audit notices from different states. They start to sort of sense, the first one might come in, might be for a state that the company doesn't really have significant connections to, and they might, I won't say disregard it, but they might think that this is really probably not that big of a deal. And then the next one comes, and the next one comes, the next one comes, and before you know it, it's like, well, why do I have 30 letters saying that this one company is going to audit me on behalf of 30 jurisdictions? And so then suddenly it gets some attention.
Right.
You will, in the first 90 days, probably get some outreach from the audit firm themselves, asking for an introductory call to go through the scope of the audit, what it means, a first information request, and of course, a non-disclosure agreement. Usually all comes and is executed and reviewed in that first 90 days. You might be providing, some initial documentation to the auditor to help scope the audit. That's what it looks like in the normal course. Now, what should the company be doing in the first 90 days might be a little different. A company that's really taking the audit notice seriously in that first 90 days is getting their team together to help go through this process. So they're educating themselves first and foremost. What is this thing? How long is it going to take? What's it going to entail? What do we currently do from a compliance perspective? Those are all things that I would recommend a company that receives an audit notice do in the first 90 days, in the first 30 days of receiving it, before any information is provided, before you start gathering information. You kind of want to know who's going to be our team that's going to get through this, because you're going to need legal, you're going to need somebody from IT, you're going to need somebody from the various departments, and getting everybody in a room to talk about it. Then, of course, you start forming your audit strategy. How do we respond? How do we limit scope? How do we reduce exposure? That all comes as well.
One step at a time, right?
One step at a time. It's a journey of 1,000 miles.
Right. Now, KPMG is a full service UP firm, meaning that you're sort of on both sides of the house in that you help with escheatment compliance, but you also help with, corporate asset recovery, much like, the mission of, Asset Find and our technology. Now, when a company, from your perspective and your experience, when a company realizes, that they have unclaimed property assets belonging to, state coffers, what does that realization kind of typically look like? Are they still surprised? And why do you think it isn't being pursued more proactively?
Sometimes it just sounds too good to be true, Sean.
Yeah,
Sometimes it just sounds, I think, too good to be true to companies, that there is this money out there that is theirs and available to claim.
right.
Um,
There's a
you know,
catch. They think there's a catch.
I think there's a catch. They oftentimes think it will trigger an audit. That's a concern that we hear a lot in the field, is if I go to claim this, will I trigger an audit myself?
Right,
Honestly, not something that we see routinely happen. Of course, we always want to make sure that our clients are compliant themselves and making filings before they
right,
start go claim funds. But we don't normally see states be vindictive. I
right,
can't say that we've ever seen it. You make a big claim and now suddenly you're under audit. I haven't personally seen it. So, I think that's a concern that comes up from time to time. I think the other one that we hear a lot of from time is, okay, if I go claim this money, I, as in the tax department, go claim this money, where do I put it when I get it? Is it mine? Does it belong to some other group, some other
right,
subsidiary, or in the organization? How
right,
does that internal process work? I'd say
right,
we do a lot of talking with our clients about, how to, particularly for the ones that want to make sure that, like, it gets recorded correctly. What information can we gather from the item that we're claiming that might help identify where in the organization it was owed originally,
right.
so that they can record it correctly. I think that's one of the things that we talk with our clients about. Part of our approach on it is we're very transparent. So we'll share what data we have related to the item. We don't always get a lot of data, but we try to share as much information as we can with our clients about the data, so they can help address those internal machinations that they have around where to record it and book it and that sort of thing when it comes in. Um, yeah, those are probably the most common ones that we hear about from a why would I pursue it
Right,
kind of thing. There's also some concern, from time to time, about the resources that it takes to process and submit a claim,
right,
from a client. How much work is going to be required by me? Of course, we do as much homework on our side as we can before we request data from a client, and try to work very collaboratively with the states to get claims processed with a reasonable amount of supporting documentation.
right.
So yeah.
So let's talk about the global scale a little bit. So, for a multinational company that's operating across multiple US states or even several international jurisdictions, how much of their total unclaimed property exposure do you think they're actually aware of, given all of those sort of situations and geographies?
The global. So this is what, back to the beginning, when I was like, oh, when I was first out of law school, this is going to be a diminishing area for law, because everyone's going to get paid electronically one day. boy, was I wrong. And one of the ways that I was wrong in that concern was of the global issues that are popping up. Um, I think broadly refer to this as, cross-border unclaimed property issues that we're dealing with, and they span a multitude of things. One is um, that we see a growing number of companies utilizing offshore resources for different areas of their business. And that in and of itself creates challenges. So, because unclaimed property laws, as we know them, are so uniquely US, sometimes professionals that are working in shared services centers abroad need education on what this is and what they're keeping track of and what it entails. So that's one piece of it that we are dealing with more and more routinely. And then you have, of course, just the overarching for a global multinational corporation. And in the age of today, it seems like a lot of companies are global and international through e-commerce platforms or money transmission businesses or whatever you think about. Uh, the range of organizational structures that are cross-border and how they impact U.S. compliance and where liabilities get recording is another area of complexity that seems to be getting more and more complex day by day. So companies are forming, are they having international operations? Sometimes they're forming foreign subsidiaries, but sometimes they're not, and the liabilities related to those activities are being recorded on U.S. entity books, and so we're seeing that sort of become a web that we have to navigate with our clients a lot. And then you have the focus on foreign unclaimed property laws, which has been something that always existed in the background. When I started at Unclaimed Property, working on the financial services side and working with insurers, we knew about gonaways. We knew about that there were requirements in foreign countries for certain industries for escheatment and unclaimed property reporting, or what's analogous to that. Um, but when Delaware clarified that they do not want unclaimed property belonging to foreign owners if there is a foreign law on the books, we kind of had to dust all of that off and crack open the books and start
Right.
re-educating ourselves on what is the exact breadth and scope of non-U.S. unclaimed property laws. And so those questions are coming to us more and more, particularly for those multinational corporations that are saying, okay, I am a payment processor. I am a fintech. I'm not regulated by the monetary authority in a jurisdiction. Am I subject to their unclaimed property law? Do I send this to Delaware? Like, I love these questions. These questions are fun to answer and work through with clients, but we're getting them more and more. So,
Right. It's never a simple day in the world of unclaimed property, especially when it relates to, we're talking about global, right?
yeah.
It's ongoing and iterative. So back to your time.
And a big, I got to give a big plug to Darren, because Darren was always the one that I went to when an understanding of foreign unclaimed property laws. He's always been a great source on knowing foreign countries and their requirements and things
Yeah,
like
our
that.
CEO, Darren Drack, has a great understanding of the unclaimed property world, not only as it relates to sort of North America, but globally. And his knowledge of it continues to sort of, put us all in awe. And he continues to want to explore his knowledge of it. So he never stops learning, which is great. We all benefit from that. So, back as your time as UPPO president, you were in a unique position to be exposed to and involved in, many important industry initiatives, issues, and discussions that most people in industry actually never get into from that vantage point. So, what are you or were you hearing from state regulators and corporate holders that you are, well, wanting to share with the rest of the industry as a whole?
Yeah. We are living in fast and wild times. And so I think that there is a lot happening. We worked, one of the things that I was super proud of, and the organization as a whole should be proud of, is sort of the way we've collaboratively worked with states, um, on different issues that are emerging in our space. We don't always agree, and that's okay. It's okay to disagree. We don't always agree on the outcomes, but we can at least approach the issues together, and try to find some common ground and ways to work through things. I think that we saw, and maybe three things jump to mind right now that one, in my time as UPA president, we worked with the states on, and I think are going to be emerging issues for holders in the space and everybody who practices in the space. There already are issues. They're not fully, they're emerged, we could say. But one is digital assets. We used to call them virtual currencies. Now we call them digital assets. But digital assets and the expansion of the unclaimed property laws to that space, the compliance obligations, how we handle them, liquidations, the risks of that. That is an emerging area that everybody needs to stay abreast of. And I think one of the things that's really interesting about that space are some of the holder, like who's the holder questions that come up. Who
Right.
has this liability? What data do you have related to these owners? How do you report it? A lot of those technical questions are, from my vantage point, are interesting to stay abreast of. The other one and we worked really collaboratively, UPO and NAPA, on virtual currency issues while I was president. I was super proud of that task force, and they continue to do great work, trying to find common ground from a compliance perspective. The other one that we saw a lot of activity, and then we reached out to the states and we said, hey, we have some practical operational concerns with this. Can we try to work through it? And we still are trying to work through it with the states together. Relates to fraudulent reporting. And so what happens to fraudulent accounts, and like, what does fraud even mean?
Right.
In the context of a fraudulent account and how that gets reported. We saw some states start to issue guidance like, here's what we want you to do when you've got suspected fraudulent account activity. And it was really hard to operationalize around, notify law enforcement, report separately, seek permission with the state before you report it, send over to the state all of the information you have around the fraud. And so we reached out and worked really collaboratively with NOP and said, look, we understand the intention behind this, and it's well intentioned. What states are trying to do here, but complicated. Like, I can't share all the details of an internal fraud investigation with you because there's privacy concerns with it, and what's going to happen to that data. And by the way, what types of fraud are we even talking about? I forget my password like every week, and I
Right.
get locked out of some
Me
accounts
almost every
every week.
second day.
Yeah. I get locked out of my accounts constantly. And so I probably have some thing somewhere that has a suspected fraud hold because I tried logging in with a password that was 4 years old 12
Right.
times. But I don't think that's what I don't think that's what they're talking about. They don't want that referred to law enforcement. So, I think working with the states on fraudulent reporting issues and figuring out what's very well intentioned, but what could actually be operationalized and defining it is a big one. And then, the third one that comes to mind is the death triggers. And it's like very morbid and spooky that we talk about death so much in unclaimed property. But the fact of the matter is, this causes a lot of things to go
Right.
unclaimed. And what the states, the legislative changes that are happening around accelerated dormancies and keeping track of death, and whether it's notice of death or date of death, and what's the appropriate trigger with death, it really has broad impacts, and we need clarity there. And we're at risk of living in a world with a patchwork of regulations related to this that's really hard to comply with if we don't seek some common ground on what we're trying to accomplish. And I would say, certain industries have been dealing with death issues for a long time. Life insurance companies, banks and financial institutions, that is more routine. There are a number of industries where keeping track of death is going to be whole new grounds for them.
Right.
And they do get it. Healthcare providers, oil and gas companies oftentimes know when owners pass away. And so feeding that information into the compliance process is going to be all new to them. So yeah, that's another area of
Well, and I think,
emerging
when
issues.
it makes a lot of sense. And when you talk about, you ended on, obviously not a happy note, but one that is so topical these days when we talk about, the great intergenerational wealth transfer that is going to happen in the
Mm.
next 2 decades, that is going to be transferring trillions of dollars down, to their heirs. And so it's going to be, I think, an even more interesting a topic that will rise to everybody's to the forefront with that level of money being transferred.
And see, Sean, it won't go away. It just
Yeah.
doesn't go away.
That's right. It just gets moved around. We need to bring it back.
Yeah.
Um, Will, I want to end with an announcement that came out, I believe it was last week or the week before. Very exciting announcement where KPMG just became the first Big Four firm to embed Claude, which I use every day, directly into its tax and legal platform. And Anthropic named KPMG its preferred consultant for private equity and portfolio companies. So, first, I just want to get your reaction on that exciting news, first. And then secondly, what is that impact and the role of AI from your vantage point on where it can help support unclaimed property and where, maybe we're not there yet and we still need the intervention and support, of teams and people.
Yeah. No. Again, we are living in wild times. The announcement that our firm had last week related to our new partnership with Anthropic, embedding Claude into our tax and advisory platform, Digital Gateway, becoming a preferred partner with them on certain ventures. Hugely exciting for the firm. I personally was excited to see it. I love seeing the firm be, a first mover and moving boldly in this space. And so, yes, I think there's a significant amount of opportunity. I think the most important thing is that we're going to be giving our clients access to some incredibly powerful tools that should make their lives and days easier. And that's amazing opportunity to be at the forefront of, and I'm really, really excited about it. I opened up LinkedIn that day that was announced, and it was just like post after post after post, and I was like, "Wow, okay." So we've really put it out there, but yes, I think it's exciting. Um, AI is coming to bear in our work in a number of different ways, and there is still an incredible need for human intervention. And so I think that both of those things are happening at the same time. And what's really important is that we think, and what I tell our teams about this sort of time of disruption, because I think we're figuring out still what is AI good at? What can it help us with? Where can it drive efficiencies and make our lives easier? What is it not good with? We're like still in this area where we're kind of figuring that out.
Right.
Every single day, some new use case or non-use case comes up. It failed
Right.
miserably at something. It did
Yeah.
really good at something.
Yeah.
And we just keep talking about it. We have a weekly office hours in our practice where we're just sharing insights and thoughts as a team about what our experiences were with it, in a given week. And so what I found, at least from an unclaimed property projects perspective, where it's really good, is it helping us with data,
Right.
um, data cleansing, data mapping. We have some neat agents and personas here at the firm that are really good at like extracting data off of documents so we can create summaries really efficiently. What used to take, manual processes or running macros in Excel to do, we can do really quickly with AI. It's very good at helping structure an argument or a position that we're writing, helping structure a narrative to make it organized if you want to be more free flowing in your idea generation and then have it come back in an organized way. We find it really helpful for that. I use Copilot a lot in helping just manage my day-to-day
Right.
work, help me prioritize things that need follow-up and that sort of thing. I don't think it's a great writer. Like, I don't love the tone of AI. I could sort of tell when AI wrote something, and I sort of miss like the human voice that comes through. So constantly putting our own voice on it is something we talk about internally. So it's definitely helping us with data in that way, helping us think through things. What we need to do as professionals, I think, is remember that we are strategic thinkers and problem solvers and critical thinkers, and where our value um, may not be in the future of taking numbers from PDFs and putting them on spreadsheets and things like that. Where the value we're going to bring in the future is being able to sit down and look at a client's facts and circumstances, looking at what the requirements are, and helping them problem solve and be trusted advisors and critical thinkers and problem solvers for our clients. That is sort of where we still need humans. We need to be smart and strategic and critical thinking, and understanding of challenges and coming up with solutions. And so the AI can help us do our jobs, but it cannot do that piece of it. And so that's where I think that's what we're sort of going for. That's what we're retooling for. That's sort of the way I think about the future.
That makes a lot of sense, and I think that we're seeing that sort of pervasive view around this sort of strategic, overlay that has to be there, and you can't sort of take this information at face value. You need the industry experience, you need the strategic thinking, to make sure that that's, embedded in the process. So I would definitely agree that I think there's a, sort of grand agreement, across the board. Also agree that, of course, it has to find data. Data is core to what we do, and we've been able to, embed AI and eh, significantly decrease the time to get to the information that we need to get to. So, those two use cases, but at points of view, we completely agree with. Now, I would say, that it was really a both a difficult move for KPMG being such a large firm to make, to take that step. It's hard for large firms to take big steps like that. And it was a bold move. And much like your move, Will, on a personal side, to bold move to move into the world of unclaimed property, I am sure that KPMG's decision will pay off just as nicely as it paid off for you, Will, and the world of unclaimed property as a whole, having you be part of it. It was an absolute pleasure having you on the show today. I learned so much. I'm sure our viewers will learn so much, and we can't wait to have you on again.
Well, thank you so much for having me. This was a great discussion.